Welcome to the exciting world of foreign exchange, or forex trading. This is the largest financial market on the planet, where trillions of dollars are exchanged every single day. Think of it as a giant global marketplace, where different currencies are bought and sold. When you travel to another country, you might exchange your home currency for the local one. That is a small forex transaction. In the trading world, we do this on a much larger scale, aiming to profit from the constant changes in the values of these currencies against each other. It is a market that never truly sleeps, operating 24 hours a day, 5 days a week, across major financial centers like London, New York, Tokyo, and Sydney. The importance of the forex market extends far beyond just traders. It is the backbone of international trade and global investment. Companies use it to buy goods and services in foreign countries. Governments use it to manage their foreign currency reserves and conduct international policy. Even your daily life is influenced by it, as the cost of imported products, from your smartphone to your morning coffee, can be affected by currency fluctuations. For individual traders like us, this constant movement presents opportunities. We analyze economic news, political events, and market sentiment to predict whether a currency's value will rise or fall against another, hoping to make the right call. Understanding this market is your first step toward becoming a disciplined trader. It is not a get-rich-quick scheme. It is a skill that requires patience, education, and a solid strategy. The beauty of Forex is its accessibility. Unlike many other financial markets, you can start with a relatively small amount of capital. Furthermore, the availability of practice accounts allows you to learn the ropes without risking any real money. This guide will walk you through the essential foundations, from setting up your tools to understanding the core concepts that every successful trader needs to master. Remember, every expert was once a beginner, and your journey starts right now with learning the basics. The goal is not to win every single trade. That is impossible. Instead, the objective is to develop a consistent approach that allows your winning trades to be larger than your losing ones over time. This involves learning how to read charts, manage your risk, and control your emotions. The Forex market is driven by supply and demand, influenced by everything from interest rate decisions by central banks to geopolitical tensions. By learning to interpret these factors, you can make more informed decisions. It's a fascinating puzzle where economics, politics, and human psychology all come together, offering endless learning opportunities for those willing to put in the effort. Before you even think about trading with real money, you must practice in a safe environment. A demo account is your best friend. It is a simulation of the live market, using virtual money but real-time price data. This allows you to experience real trading conditions without any financial risk. We will use OctaFX as an example for setting up your account. First, go to the OctaFX website and find the Open Account button. You will need to fill in some basic information like your name and email address. Once you have registered, you will be prompted to choose an account type. For our purposes, select a demo account for the MetaTrader 5 platform. Once your demo account is created, you will receive your login credentials, which include media group, selecting demo account type on trading platform, screenshot of MetaTrader, 5 demo setup page at stock, @distribute_equally, an account number, a trader password, and a server name. Keep these details safe. The next step is to install the trading platform MetaTrader 5 or MT5. You can download it directly from the OctaFX website or from the official MetaTrader 5 site. The installation process is straightforward. Just follow the on-screen instructions. Once MT5 is installed on your computer or smartphone, open the application. It will ask you to log into an existing account. Here is where you will use the login details that OctaFX provided to you. Enter the account number, password, and select the correct server name. After you have successfully logged in, you will see the MT5 interface. It might look a bit intimidating at first with all its charts, numbers, and windows, but do not worry. You will quickly get used to it. The main areas to familiarize yourself with are Media Group, screenshot of MetaTrader 5, interface highlighting Market Watch, Navigator, and chart windows at stock at distribute_equally. The Market Watch window, which lists all the available currency pairs and their prices. The Navigator window, where you can see your accounts, and the main chart window, which displays the price movements of a selected currency pair. Spend some time clicking around, opening different charts, and changing the time frames to see how the interface works. This is your trading cockpit, so it is crucial to feel comfortable navigating it. Now, you are ready to place your first practice trade. In the Market Watch window, right-click on a currency pair, for example, EUR/USD, and select New Order. a new window will pop up. Here you can set the volume or lot size of your trade and decide whether you want to buy or sell. If you believe the euro will strengthen against the US dollar, you would click buy. If you think it will weaken, you would click sell. You can also set a stop loss to limit potential losses and a take profit to secure gains automatically. For now, just try opening and closing a few trades to get a feel for the process. This hands-on experience is invaluable. To trade effectively, you need to speak the language of the market. Let's start with the basics. A currency pair is the foundation of every Forex trade. You are always buying one currency while simultaneously selling another. For instance, in the EUR-USD pair, the euro is the base currency and the US dollar is the quote currency. The price shown, say 1.0850, means 1 euro is worth 1.0850 US dollars. Price movements are measured in pips, which stands for percentage in point. For most pairs, a pip is the fourth decimal place, 0.0001. If EUR-USD moves from 1.0850 to 1.0851, that is a 1 pip move. This is how you measure your profits and losses. Next, let's discuss order types. Your entry is the price at which you open a trade. To manage risk, you must use a stop loss or SL and a take profit or TP. A stop loss is an instruction to automatically close your trade if the price moves against you by a certain amount, preventing further losses. A take profit does the opposite. It closes your trade automatically when it reaches a specific profit target. The size of your trade is determined by the lot size. A standard lot is 100,000 units of the base currency, but beginners should start with mini lots, 10,000 units, or even micro lots, 1,000 units, to minimize risk while learning. Technical analysis involves reading charts to predict future price movements. Two fundamental concepts here are support and resistance. Support is a price level where a downtrend is expected to pause due to a concentration of demand. Resistance is the opposite. It is a price level where an uptrend is expected to pause due to a concentration of supply. Traders often buy near support and sell near resistance. Trendlines are lines drawn on a chart to connect a series of prices, helping to identify the direction of the market's momentum. An upward sloping trend line indicates an uptrend, while a downward sloping one indicates a downtrend. Finally, traders use different time frames to analyze the market, from 1-minute charts for short-term scalping to daily or weekly charts for long-term position trading. A powerful tool used across all time frames is the Fibonacci retracement. This tool helps identify potential support and resistance levels. After a significant price move, the market often retraces or pulls back a certain percentage before continuing in the original direction. The Fibonacci tool highlights key levels like 38.2%, 50%, and 61.8%, where these turning points are likely to occur. Mastering these terms is essential for building a solid trading foundation. Success in Forex trading is not just about knowing the concepts, it is about applying them with discipline and building good habits. The most important rule for beginners is to manage your risk. Never risk more than you can afford to lose on a single trade. A common guideline is to risk no more than 1 to 2% of your account balance per trade. This means if you have a $1,000 account, you should not risk more than $10 or $20 on any one position. This approach ensures that a few losing trades will not wipe out your account, allowing you to stay in the game long enough to learn and become profitable. Always use a stop loss to enforce this rule. Another key habit is to treat your demo account seriously. Use it as your training ground to test strategies, understand market behavior, and master your trading platform. Set realistic goals for your demo trading. For example, aim to be consistently profitable for at least 3 months before you even consider opening a real account. This period of consistent practice helps you build confidence and refine your approach without the emotional pressure of real money. Keep a trading journal to log every trade, noting your reasons for entry, your exit points, and the outcome. Reviewing your journal is one of the most effective ways to learn from your mistakes and successes. Controlling your emotions is perhaps the most challenging aspect of trading. The market can trigger powerful feelings of greed and fear. Greed might tempt you to take oversized risks after a few wins, while fear might cause you to close a good trade too early or avoid taking a trade altogether after a loss. Successful traders learn to remain objective and stick to their trading plan regardless of their emotions. Never engage in revenge trading, trying to win back money immediately after a loss. This almost always leads to bigger losses. Accept that losses are a normal part of trading and focus on executing your strategy flawlessly over the long run. Finally, commit to continuous learning. The Forex market is dynamic and always evolving. What works today might not work tomorrow. Dedicate time each week to read books, follow reputable financial news sources, and learn from experienced traders. The journey to becoming a consistently profitable trader is a marathon, not a sprint. It requires patience, discipline, and an unwavering commitment to self-improvement. Do not be discouraged by the learning curve. Every trade, whether a win or a loss, is a lesson. By focusing on the process and maintaining discipline, you will build the skills and mindset needed for long-term success in the exciting world of Forex trading.